Analysis of the consequences of Donald Trump's trade policy. The U.S. economy has been hit. In recent days, the U.S. stock market has been experiencing serious turmoil, which experts directly link to President Donald Trump's tariff policy. The scale of what is happening is impressive. The U.S. market has lost more than $4 trillion in capitalization, marking the most significant drop since September last year. Nadakon Lee, however, does not relieve investors' concerns. The tech giants from the Magnificent Seven were hit especially hard. Tesla fell by 15%, while shares of Apple, Microsoft, Alphabet, Amazon, NVIDIA, and Meta fell by 25%. The Dow Jones lost almost 900 points, and the S&P 500 fell by 27%, indicating the large-scale nature of the decline. The Canadian stock index also showed a decline, reflecting the international nature of the problem. President Trump, commenting on the situation, refused to rule out the possibility of a recession this year, calling what is happening a transitional period. According to him, the current measures are aimed at returning wealth to America. Commerce Minister Howard Lutnikova from Motley Fool notes the unprecedented nature of the situation, where the administration openly admits that tariffs will lead to painful consequences. Despite the employment report showing relative stability in the labor market, experts warn of a possible deterioration in the situation. Of particular concern is the planned continuation of deportations and layoffs in the public sector. Trade conflicts with Canada, Mexico, and China are creating additional pressure on the U.S. economy. Retaliatory tariff measures by these countries, combined with rising costs for American consumers, are creating an explosive economic situation. We present an important economic review of the U.S. markets over the past week. We have seen a significant drop in the main indices, which is causing serious concern among investors and analysts. The S&P 500 showed its maximum weekly drop of 31% in the past 6 months. The yield on 10-year U.S. Treasury bonds fell to 4.21%, although last week it was above 4.31%. The Wall Street Dollar Index is at its lowest since early November. Of particular concern is the situation in the technology sector. Tesla lost more than $125 billion in capitalization in one day of trading. Shares of Apple and NVIDIA fell by approximately the same amount. Overall, the tech sector of the S&P 500 fell by 43%. Key factors in the market decline include uncertainty in the U.S. administration's trade policy, fears of a possible recession, inflated stock valuations, and disappointing corporate reports. Delta Airlines halved its first-quarter profit forecast, sending its shares down 14%. Chinese stocks and consumer prices fell more than expected. Tur Ozak, CEO of Lazard, noted that the uncertainty caused by trade wars with Canada, Mexico, and Europe is forcing boards of directors and top management to reconsider development strategies. The Trump administration seems willing to accept a market decline and even a possible recession to achieve broader economic goals. Experts suggest that the administration is allowing the market to fall to accomplish its long-term objectives. In the coming days, data on consumer confidence and job openings will be released, which could have an additional impact on investor sentiment. The White House continues to insist that the economy remains strong despite market turbulence. Economic analysts continue to closely monitor developments in the U.S. markets, where volatility remains a key factor of investor concern. Despite optimistic statements from experts about the positive impact of tax cuts on investment and real wages, market participants remain skeptical. Special attention is focused on several key indicators: the upcoming inflation report, Federal Reserve decisions on interest rates, and possible government measures to stabilize the economy. DNN Alil emphasizes the need to diversify portfolios in the face of ongoing instability. In parallel with this, early negotiations have begun to update the trade agreement between the United States, Mexico, and Canada. Commerce Minister Howard Luth and U.S. Trade Representative Jameson Greer held a meeting with the Canadian delegation, including Finance Minister Dominic LeBlanc, U.S. Ambassador Kieran Hyman, and Ontario Premier Doug Ford. Trump officially links his tariff policy to the fight against illegal migration. However, sources close to the negotiations indicate his desire to revise the trade agreement, which he previously called the fairest and most balanced in history. The White House has not yet outlined clear goals for the negotiations. China's involvement in the auto industry adds complexity to the discussions. Although China's investment in Mexico is less than in the U.S. and Canada, Canada's protectionist policies in the dairy industry have been particularly criticized. Ontario Premier Ford stated that Louth initiated discussions on revising the trade agreement after the province announced plans to eliminate export duties on electricity for the U.S. and reduce tariffs from 50% to 25%. But the main thing is to build constructive relations between the countries, Ford emphasized. In recent weeks, trade relations between the world's largest economies have heated up to the limit. The Trump administration continues its aggressive tariff policy, prompting retaliatory measures from trading partners. Negotiations with Mexico are attracting particular attention. Mexican President Claudia Baum has proposed raising tariffs on Chinese goods to U.S. levels. "We prioritize trade with countries with which we have an agreement," she said on March 6, noting the significant volume of imports from China without a trade agreement. U.S. automakers expect concessions from the Trump administration. The current USMCA agreement requires 75% North American content in cars for duty-free trade. The penalty for non-compliance is only 2.5%, but Senator Bernie Morena proposes increasing it tenfold. The situation was further complicated by the introduction of 25% tariffs on goods from Mexico and Canada on March 4th. However, for cars compliant with USMCA rules, the tariffs are suspended until April 2nd. Canada responded by imposing duties on U.S. goods worth $21 billion, including fruits, vegetables, and household appliances. Additional tension has been created by Trump's decision to impose 25% tariffs on steel and aluminum. In response, the European Union imposed a 50% duty on American whiskey, motorcycles, and boats, with plans to expand the list in mid-April. Trump retaliated by threatening 200% tariffs on European alcohol. Experts warn that an escalation of the tariff war could seriously impact global supply chains and lead to higher prices for consumers. Republican senators urge caution, fearing market destabilization and a drop in corporate profits. In today's issue, we will examine the latest developments in international trade that significantly affect the global economy. The U.S. administration continues to tighten trade policy by introducing an additional 10% tariff on Chinese goods. This decision continues the tariff policy initiated under Biden and during Trump's first term. Beijing was slow to respond with countermeasures. Since February 10th, China has imposed 15% duties on American coal and liquefied natural gas, as well as 10% tariffs on crude oil and agricultural machinery.